Thanks for tuning in to your daily dose of quick real estate updates, local housing trends, and market data, plus tips, tools, and strategies to help you buy, rent, or invest with confidence. You're now getting ready with RealiCare Reports, powered by the innovation team, Cami and Rex. Now go grab your favorite morning beverage, whether that's coffee or tea, and let's enjoy this episode.
Welcome to the Deep Dive. Today we're diving into a brand new report from the Mortgage Bankers Association.
That's right.
We've got their weekly survey on mortgage application volume, specifically looking at the data for the week ending April 18th, 2025.
Just came out April 23rd.
Exactly. And our goal today is really to look beyond just the raw numbers. We want to understand what they're telling us about the current state of the housing market.
And maybe what it means for you, the listener.
Absolutely. So our main source is that MBA press release. Okay, let's unpack this. The headline seems pretty significant right off the bat.
It certainly does, yeah. The MBA report highlights a substantial 12.7% decrease in overall mortgage applications compared to the week before.
12.7%. Wow.
Yeah, and that's the seasonally adjusted market composite index. Even if you look at the unadjusted number, it's still an 11% drop.
Okay, so either way, a big move down.
Definitely. A week-over-week change like that, it definitely signals something shifted pretty quickly in the market.
That significant overall drop certainly makes you want to look closer, right, at the different pieces. Let's start by drilling down into refinances.
Good place to start.
Because the refinance index saw an even bigger move, a full 20% decrease from the week before.
20%, yeah. Huge.
That sounds like a really massive change, but there's some important context here, isn't there?
There is. You have to look at the year-over-year comparison. Refinance applications were still, get this, 43% higher than they were during the same week last year.
43% higher. Okay,
Wow.
So what do you think is behind this recent, cooling off after what sounds like a period of much higher refi activity?
Well, what's fascinating here is the detail the MBA provides. They focus specifically on higher balance loans.
Oh, okay.
The report points out that the drop in refis was particularly pronounced in that segment for those bigger loans.
Right.
And that actually led to a substantial fall in the average loan size for refinances.
Interesting. So maybe the people with those larger loans who could really benefit already jumped in.
That's what it suggests, yeah. A potential clearing out, maybe, of that segment of homeowners who are most incentivized by, possibly lower rates we saw earlier.
Mm-hmm.
It kind of implies that future refi activity might be a bit more muted unless we see another big drop in rates.
Right. And did that affect the overall mix?
It did. The refinance share of total applications, it dipped to 37.3%. That's the lowest we've seen since January.
Okay, lowest since January, so
Yeah.
definitely a shift there. But it wasn't just refinances seeing a slowdown, right? Purchase applications also took a hit.
Correct. They weren't immune. The seasonally adjusted purchase index decreased by 7% from the previous week.
7%.
And the unadjusted figure was down 6%. But again, just like with refinances, you got to look at the year over year.
Right, that comparison seems key here.
Exactly. If we connect this to the bigger picture, despite this recent weekly dip, purchase applications were still 6% higher than they were during the same week last year.
6% higher than last year. Okay, so that tells a slightly different story then.
It does. It indicates that while there might be some recent hesitation, maybe some pullback in the market right now, the underlying demand for buying homes, it still seems stronger than it was a year ago.
Okay. And did that apply across the board for purchases?
Pretty much. The report mentions that both conventional and government-backed purchase activities saw this week-over-week decline.
So we're seeing a slowdown in both refi and purchase activity right now, week over week. But the purchase market, at least, is still stronger than a year ago. What's the main driver here? What's causing this overall drop? The report seems pretty clear on that.
Yeah, they point a finger directly at interest rates. Joel Can, he's the MBA's vice president and deputy chief economist.
Right.
He directly attributes the overall decline to rising rates. The report highlights that the average contract interest rate for a 30-year fixed mortgage went up for the second week in a row.
Second week. And where did it land?
It reached 6.9%. That's almost a 30 basis point increase in just 2 weeks.
Wow, nearly 0.3% in 2 weeks. That's a fast jump.
It really is. And that kind of rapid increase, well, it can certainly make potential borrowers pause and reconsider their plans,
Absolutely. And it's not just the general trend. The report breaks it down, right, for different loan types. Let's look at the standard 30-year fixed, the conforming loans.
Yeah, conforming, so loans of $806,500 or less.
Right. What happened there?
The average rate jumped to 6.90%, up from 6.81% the week before.
Okay, and points went up too. The 2 points are those fees you pay up front, right?
Right, exactly. Fees paid directly to the lender at closing, usually to get a slightly lower rate. And yes, points increased slightly too, to 0.66 from 0.62.
So the effective rate, the total cost, definitely went up.
It did, and the same thing happened with the 30-year fixed jumbo loans, those bigger ones, over $806,500.
Okay.
Their average rate also climbed to 6.90% from 6.84, and points jumped even more on those, from 0.30 up to 0.45. So the effective rate increased there too.
Okay, so conforming and jumbo 30-year fixed, both up. What about other common types, like FHA loans?
Yep. FHA loans, often popular with first-time buyers. Their 30-year fixed rate also increased, though maybe a bit less dramatically, up to 6.56% from 6.52. Points stayed the same on those.
In 15-year fixed.
15-year fixed rates also went up. They climbed to 6.20% from 6.11%. So, yeah, pretty much an upward trend for all those fixed-rate options.
Okay, so fixed rates are marching higher. But was there anything that bucked the trend?
Actually, yes, and this was interesting. While most fixed rates went up, the average contract rate for 51 ARM's adjustable rate mortgages, it actually decreased. It went down to 6.01% from 6.1% the week before.
Oh, interesting. Down 0.1%. And points?
Points on ARMs decreased too, slightly, from 0.56 down to 0.48. So the effective rate on those 51 ARMs actually went down.
Huh. That's a subtle but, well, potentially significant detail, isn't it?
It could be.
While most people still lean towards fixed rates for the stability, that dip in ARM rates might make them look, I don't know, a little more appealing for certain borrowers right now.
It certainly could, maybe for people who think rates might fall again soon, or perhaps those who don't plan to stay in the home long term, beyond that initial fixed period.
Right. Or maybe plan to refi within 5 years anyway.
Exactly. It definitely raises questions about, borrower strategy and how people adapt to the rate environment.
Yeah. And speaking of shifts, we're also seeing changes in the share of different application types, aren't we? We already mentioned the refi share dropped.
Right, down to that 37.3%.
What else changed in the mix?
Well, interestingly, the ARM share also decreased slightly, despite the rate drop. It landed at 7.5% of total applications.
Okay, so maybe that ARM rate dip wasn't enough to move the needle much on demand yet? But what about FHA?
Now that's where we saw an increase. The FHA share went up to 16.7% from 15.8% the week before.
Okay, that seems noteworthy. Almost a full percentage point increase in share in 1 week.
It does. What do you make of that?
Well, that uptick in FHA, it might signal perhaps more price-sensitive buyers entering the market, or maybe first-time buyers who often use FHA loans.
That's a really insightful point. Could indicate maybe less competition from higher-end buyers or just more activity at that lower price point where FHA is common.
Possibly.
Yeah.
And what about the others, VA and USDA?
Smaller moves there. The VA share saw a slight decrease down to 13.4%, and the USDA share also edged down a tiny bit to 0.4%.
Okay, so maybe just minor fluctuations there.
Yeah, these smaller shifts, hard to read too much into them week to week, but the FHA jump stands out.
Definitely. And bringing it back to the sort of the overall feeling in the market. Joel Kahn's commentary, it really emphasizes the broader context, doesn't it? Beyond just the numbers.
It really does. He specifically mentioned that, and I'm quoting here, economic uncertainty and rate volatility impacted prospective home buyers.
Right. So it's not just the level of the rates being higher.
Exactly. It's also that feeling of instability, the volatility, not knowing what might happen next. That seems to be making some people hesitate, hit pause on their search.
Yeah, that uncertainty factor. It can be just as powerful, maybe even more powerful sometimes than the actual rate itself, can't it?
Absolutely. It can lead potential buyers to just, adopt a wait-and-see approach, even if they fundamentally want or need to buy a home.
So, okay, we've covered a lot of ground here from this one weekly report. If we were to bring it all together, what would you say are the absolute key takeaways people should keep in mind?
Right. To recap, I think first, obviously, that significant decrease in overall mortgage applications, big drop.
Driven mainly by rates.
Driven largely by those rising interest rates, yeah. Second, refinance activity has really cooled off, especially for those larger loans. Suggests maybe that wave has crested for now. Third, Purchase applications also dipped in the latest week, but, and this is important, the market for buying is still stronger than it was this time last year.
Right, that year-over-year context.
Crucial. And finally, we're seeing these interesting shifts in the types of mortgages. FHA share notably up, potentially signaling more first-time or maybe more budget-conscious buyers. And that surprising dip in AR rates, even as fixed rates climb.
And for you, the listener, really understanding these trends can provide some valuable context, right, for thinking about buying or maybe refinancing.
Absolutely.
This current environment, rising rates, that potential volatility, it's definitely something you'll want to factor into your planning, into your decision-making.
No doubt. And those shifts we're seeing, like in FHA share or the ARM rates, they might present different opportunities or, different things to consider depending on your own financial situation, your comfort level with risk.
Yeah, definitely things to weigh.
And look, the single week's data, it's just a snapshot, right? Yeah. But it really does offer a picture of a market that's, well, clearly reacting to changing conditions. If you connect it to the bigger picture, it just highlights how sensitive housing is to interest rate moves and that broader economic feeling, that sentiment.
It really raises that important question. Are these higher rates going to keep putting a damper on things, on buying and refinancing, or is this maybe just a temporary pause?
Yeah. Is the market just adjusting to this new level? The fact that purchase apps are still up year over year, that does suggest there's still some, underlying demand out there.
Hopefully seems like there's still some fuel in the tank, despite the headwinds.
Seems that way.
So as you, our listener, process all this information, it's really worth thinking about how these national trends might be playing out differently or similarly in your own specific local housing market.
Good point. Markets can vary a lot locally.
Are you seeing similar shifts where you live? What other, local economic factors might be influencing things in your area? This MBA report, it gives us a really valuable starting point, that broader context for you to start exploring and understanding this constantly evolving real estate landscape. Thanks for taking this deep dive with us today.
Yeah, thanks for listening.
Now, as you go about your week, here's maybe a final thought to ponder. How might a sustained period of higher interest rates, if that's what we're in for, ultimately reshape the dynamics of the housing market, not just next week or next month, but in the longer term? Something to keep in mind.
Well, that wraps up today's episode of RealiCare Reports, where real estate meets real life. For more updates, tools, and insights that will help you buy, rent, or invest with confidence, be sure to follow, subscribe, stay connected, stay informed, and stay ready. Until next time.